Hi, my name is Townsend Hargis, and I'm a member of the Hargis Family Agency. What I'd like to talk to you about today is the difference between term life insurance and permanent life insurance. And I've got a little illustration to kind of walk through both types of policies. And both types of policies are great. I own both types of life insurance. I have a $1 million term insurance policy, and I have a $500,000 permanent life insurance policy. And there's pros and cons of each type of life insurance. So to illustrate how term insurance works, fundamentally, what I'm going to show you is an example of a one-year term policy for $50,000 in coverage for a 30-year-old male. Now, what an insurance company does to determine how much to charge somebody for a certain amount of life insurance is they look at a mortality table. And the mortality table, the only factors of a mortality table is how old you are and whether you're male or female. That's it, okay? So when you look at a 30-year-old male for $50,000 in coverage, when they look at that chart, it says that that individual would pay $10 a month for that amount of coverage for a one-year policy. And basically, I can tell you this and keep this in the back of your mind, that for a one-year term insurance policy, most of this premium is going towards the cost of insurance. So keep that in the back of your head. Now, how this policy works is this 30-year-old male is going to pay his premium over to the insurance company every month. 10, 10, 10, 10, 10, 10, 10, okay? Now when he turns 31, because it's a one-year policy, the premium's going to increase. So it renews, it's a one-year policy, it renews on his 31st birthday, and now it's more expensive for a 31-year-old male for $50,000 in coverage than it is for a 30-year-old male, because he's 1 year older and he's 1 year closer to death. All right. So when he's 31, the premium increases. It goes from $10 a month to $11 a month. Now this 31-year-old male, he's going to pay that premium over to the insurance company every month. 11, 11, 11, 11, 11, 11, 11, and he turns 32. Now at 32, guess what? The premium is going to go up again. The policy renews, it's 1 year term. And now instead of $11 a month, it's now $12.50 a month, but very cheap still, okay? And he pays that premium over to the insurance company every month, $12.50, $12.50, $12.50, $12.50, and on it goes. Now here's the pros and cons. The pro, the basic thing about term insurance and why it's good for certain scenarios is that it's very inexpensive, all right? This is ideal for short-term needs. So an example of a short-term need where we sell a lot of term policies is when a customer buys a home and they have a 30-year mortgage and the mortgage is $500,000, and they need to know that if something happens to them, if they die, that their wife and kids gets to stay in that home forever. So they have a term life insurance policy for 30 years to cover the note of the mortgage, the $500,000 30-year term policy is what they would end up buying. That is perfect for that kind of scenario. But to be honest with you, cheap is the best part of term insurance, okay? Now here's some of the cons. The drawbacks of term insurance is this. Over time, term insurance is going to become unaffordable. And let me give you an example. I am 36 years old. I buy $1 million 30-year term policy, and that takes care of me. I'm covered for $1 million all the way till I'm 66. Now at 66, I go back and then I want to renew my policy for $1 million and have it for another 30 years. But when I see the premium associated with a 66-year-old male versus a 36-year-old male, it's going to be so expensive, I'm not going to be able to afford it, or I'm certainly not going to want to buy it. All right. So what we see a lot of times is that customers that wait too long to buy coverage, or they had coverage that renews at an older age, it's unaffordable, okay? The other drawback to term insurance is that between, let's say I'm 36 years old right now, and before I get to 66, I have a bout of cancer that I have to overcome. I get diabetes, I have a health issue. And then when the policy renews at 66, 30 years later, when they underwrite me, I'm not eligible. I can't get any more life insurance because of the health issue that I suffered, okay? Even if I beat it, okay? Now, and the last thing that I would leave you with when looking at term insurance is that term insurance only pays out less than 2% of the time in the industry. So again, if you want your life insurance to be in force when you die, this is probably not the most optimal type of policy to buy. Thanks so much.